Hello students, for today's video clip, we are going to learn about the securitization process with a poor level of cash flows. That was the cause in 2008, a mortgage-backed security crisis in the US, as well as all around the world. So what brought up the mortgage crisis of US in 2008? So the securitization process and the mortgage-backed securities starting from always the players, household and banks. They made a contract for the lending mortgages. Banks lend the mortgage loan to the household, and then they pay back with the interest and the principal payment. The households can be high incomer with the stable the income, and the middle incomers, even the low incomers, can borrow money from bank as a mortgage. So the interest principal should be paid every month. So once banks sell their mortgage loan, now they gathered the prime mortgage loan as in the form of this tranche. We say the tranche is group. This group is made by the payment from only the high incomers, very secure, and the prime, the stable based interest and principal payment. They also collect this interest and principal and make a group in tranche like mortgage loan that has a little bit higher interest rate, because sometimes the middle incomers they fail to pay back the interest and principal. That's why it's a little bit higher interest. And then low incomers had who has the part-time job or a very low income. They fail to pay the mortgage loan based on the economic situation. So the mortgage loan has a very high interest rate required. So the reason why banks make those tranches is that they want to sell these cash flows to the investment bank. One of the investment bank related to mortgage loan is government-sponsored organization like Fannie Mae, Freddie Mac. They are the sponsored organization by the government. So the banks sold those tranches, which is cash flows from high incomers or middle incomers or low incomers in the form of the different groups. So they make more money based on this cash in. Now the banks sold the lend more mortgage, even lowest income, and then they make this interest and the principals from these low incomers with the subprime mortgage loan in the tranche 4, for example, with the 10% or 12% more. Then what would happen in the government-sponsored organization? Government-sponsored organization made some subsidiaries after balance. After balance means not in the organization, but in a subsidiary in a different organization. We say this is a special purpose vehicles where this vehicle want to make some securities. The security means if a cash flows regularly incurs, then we can make these cash flows in a securities. That's why the stocks or bonds or all kind of the cash flows, regular cash flows, is interpreted as the securities. So this under the government-sponsored organization, these paper companies, special purpose vehicles, make this interest and principal with this mortgage-backed securities. This tranche, the group of the middle incomers, payment of interest and principal, also can be now transferred into the mortgage-backed securities. Also, the subprime mortgage-backed securities. Now you realize that why the people say subprime mortgages. Why it is subprime mortgages, right? This subprime mortgage-backed securities has the cash flows from the low incomers, unstable cash inflow. Okay. Again, the reason why the government-sponsored organization made this special purpose vehicle off the balance sheet is that they don't want to show those kind of risky securities on their balance. Okay, so all the risk is now on the responsibility of a special purpose vehicle. But anyway, the special purpose vehicle is a part of this government-sponsored organization. Now, the main purpose of making this special purpose vehicle is that this government-sponsored organization want to sell these securities, those securities to the investors. Investors like firms or banks and funds, the individuals. In 2008, 2018, there was a big bubble in the securities market. So they wanted to get more interest, even with their very risky investment. So they made this the pool of the cash flows with this mortgage-backed securities, and then they sell this the mortgage-backed securities to the investors, all the investors. In order to secure these cash flows generated by these mortgage-backed securities, now the credit rating firms gave the credit ratings into the mortgage-backed securities. All the mortgage-backed securities or bonds or some the secure-based securities has their own the credit ratings. So the investors got the credit information, and that they paid these fees to the credit rating firms. The three big the credit rating firms are Standard & Poor's and Fitch's and Moody's. They analyze the riskiness of these prime mortgage-backed securities, or the subprime mortgage-backed securities by giving very high credit ratings, the AAA or the AA plus or AA. That is very, very high credit ratings. They're almost the equivalent of the national, the country, the credit ratings. Like US has the AAA. US bond has the AAA credit ratings, almost the same the credit ratings. Even though the subprime mortgage-backed securities is AA, even though this the cash flows is created by the low incomers, interest and principal. Low incomers usually they fail to pay this interest and principal when the economic situation was not good. So anyway, the credit rating company, because this special purpose vehicle is a subsidiary of government-sponsored organization. So government-sponsored organization is supported by the government. This government is facilitated this. The reason why the government facilitated this financing procedure is that this financing process is that they want all the money circulate in the economies. So all the household and the banks or investors spend more money based on their interest, their income. So this government actually allow this financing procedure to do just so in 2008, 2009, even now. But what happened? In 2009, in the financial crisis, the depressions, the recessions came to the all around the world. And then what happened? Then this low incomers couldn't pay this interest and principal because they lost the job. All of a sudden. So this subprime mortgage loan became just the junk bond because there's no interest principal inflow to these mortgage-backed securities. So these investors, like firms, banks, funds, or individuals, invested in subprime mortgage-backed securities, lost a lot of money. Then this government, the U.S. government, decided to buy decide to buy those junk bond. Even the middle incomers couldn't pay out this cash flows, interest, and principal, so this mortgage-backed securities even zero value. But the government decided to the bailout. We say this is a bailout. The bailout by purchasing this the mortgage-backed securities from the investors who have this zero value of these securities. So why? Because now we have to keep in mind that this Y, which is GDP, is equal to C is consumption plus the investment and the government spending minus tax plus export minus the import. So the GDP is comprised with this component as other countries, but a very unique feature of this GDP component is that the consumption part is taking 70% of GDP. The U.S. People they spend the money using a lot of credits, and they allowed to do so, and a lot of money, the investment based on this investment income, they spend a lot of money again. So in order to increase or maintain this GDP, these governments now bailed out by purchasing this junk bond. And then in 2009 and 2010, there are a lot of the problems, and then the government helps this out. So those are the securitization process with the mortgage-backed securities, and then why this financial crisis happened. Okay, see you in the next video clip.